Hey guys, Sean Pruitt, president of Kingdom Exploration. I'm reading a lot of news about the oil and gas industry, and I'm going to break it down for you. Okay, in the signing of this Inflation Reduction Act, the message that it's sending to the oil and gas world is na 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 na, hey hey hey, goodbye. I mean, when you watch a hockey game and they lose, that's the song that's played for the visiting team. It's like, bye, we beat you so bad. Have fun on your flight home because you lost. That's the message that it's sending. Green won and the oil and gas industry lost, okay? And so if you watch my earlier videos, January 2021 is when Joe Biden came into office. And at the time, oil was around $52, $53 a barrel. And I said, mark my words, his green energy policies is going to destroy global oil production, causing oil prices to skyrocket. And look where we are today. We went from a massive oil glut that we didn't think would ever end. We didn't think energy demand would come back from all this COVID crap. And I said, man, don't listen to the news. Look at what's going to happen, okay? And so the problem is that a lot of these people on Fox News, CNN, they bring people that agree with them, or they bring on people that don't know what they're talking about simply because they're bringing the expert knows everything, right? But the journalist that's bringing them on or interviewing them, they don't know anything about the oil and gas industry. So I'm an oil man that's delivering the truth, the news, whatever you want to call it, okay? And so the reason why energy prices went from $50-something a barrel to over $100 a barrel during the time of his administration was simply because his energy policies suck, okay? That there's no simpler way to say that, okay? And so I'm going to read some news articles. I'm going to explain to you why we're in the situation we're in today, and I'm going to talk about why I see oil prices going up. Now, somebody asked me, he's like, Sean, you keep saying oil prices are going to go up, but what's up? I mean, oil price has been dropping. Well, I also said that back in 2019, 2020, 2021, when oil prices were very low. Look, in the long haul, the stage is set for high energy prices, okay? But there's many steps to that point, okay? We're at $90-something a barrel, and we have the biggest recession fears we've ever seen before, and we have a pro-green administration in place, and they're winning big by signing into a law, the Inflation Reduction Act. That wreaks havoc on the oil and gas world, but it's on paper. But the truth is, fundamentally, we don't have enough energy. We don't have enough oil. And we need green and we need oil. We need it all, and we don't have enough. I mean, demand for energy, demand for oil has been growing for the last 50 years, okay? We had a reduction in demand during the COVID lockdowns, but that wasn't fundamental. That was a fluke. We all knew that energy demand was going to come back. People were saying, we lost 30 million barrel a day demand. It's never coming back. Really, we only lost 10 million and it came back very quickly, okay? So the news just says things for clickbait, and what the thing that multiplies is an interesting article versus the truth. Truth is not as exciting, okay? And so the algorithm is in place, and it only multiplies lies, which is more interesting than the truth, okay? So here's the deal. Wall Street sees another big commodities rally in 2022, okay? And while Wednesday saw another rally sparked by data from the Energy Information Administration, EIA showing a large drop in U.S. crude inventories, 7.1 million barrels. It's not enough to push prices back into $100 territory, simply because of recession fears and China news and so on and so forth. Today, commodity markets appear to hold irrational expectations as prices and inventories fall together. Demand beats expectations and supply disappointments. Global head of commodities research Jeff Curry. Okay, so what he's saying is it's irrational expectations as prices and inventories fall at the same time. Okay, fundamentally, when inventories go up, okay, oil prices drop, which is what we call the oil glut. That's why oil averaged $50-something a barrel under Trump, because we had an oil glut. We're producing too much oil. Okay, now oil markets are the tightest they've been in ever, and their inventories are dropping but oil prices still continue to drop. Okay. And so this is a paper war. This is not a fundamental oil and gas price. This is traders trading futures, and it's all based upon fears, rumors, what the future holds versus what is happening today. If it was based purely upon what is today, if it was based purely upon extrapolating how much oil we're going to need in the future and how much oil actually exists, oil would be around $150 a barrel, but it's not, okay? And so the only rational explanation in our view is a destocking as the commodity consumers deplete inventories at higher prices, believing they can restock once a broad softening creates excess supply. Okay. And so people are trusting that the shale producers in America are going to somehow come up with more oil along with OPEC. Okay. That just simply isn't true. Like UBS Goldman is predicting a soft landing and a commodity index rally of 23% by the end of 2022. Okay. And so everybody is expecting that we're going to be able to restock these inventories. Okay. But there's a reason why we're spending oil that we do not have, because there's just simply not enough oil, because we're in a 5-year underinvestment cycle. Nobody's investing in oil and gas right now in this Inflation Reduction Act, okay? Biden signs Inflation Reduction Act into law. The message that it's sending is, hey guys, we won the war against fossil fuels, and we're going to spend trillions and trillions and trillions of dollars on green, and we're going to phase out fossil fuels, okay? And so here's the truth about the Green Initiative, okay? And so there's a group called the G7, all right? The G7 is the largest economies which dominate global trade in the financial system, okay? Now, the 7 are Canada, France, Germany, Italy, Japan, United Kingdom, and the United States, okay? And so they just ended their summit meeting with a pledge to move away faster from fossil fuels and to alternative energy, all right? Like wind and solar and so on and so forth, okay? Now, I want to read a few key points, okay? The goal to phase out fossil fuels was put on pause due to the invasion of Ukraine, okay? And so Germany was hell-bent on renewables, closing fossil fuel power plants, deactivating nuclear reactors, and Germany found out real quick that renewables are not cheap, doubling the price of their energy in comparison to the U.S. Now, all of a sudden, they went from shutting down all of their coal plants, shutting down the demand for oil, and now they are going back to all of those things because they realize that green energy is much more expensive, okay? And so in the last 20 years, we have spent $5 trillion on green energy, only reducing global fossil fuel demand by 2%. It costs $5 trillion, $2.5 trillion to reduce global demand of fossil fuels by 1%, $2.5 trillion, okay? That means for every $2.5 trillion, we're reducing oil demand by 1 million barrels a day, okay? Now, here's the deal. Oil demand is growing. So the cost for green tech to replace global energy demand for fossil fuels will increase. So that 2.5 trillion next year will be more like 3 trillion. And so on and so forth. They'll keep growing. It's a number that you will never catch, guys. We will never get off oil. The world was built on energy, and we will never get away from it. So here's something you have to understand. The reason why we're in this situation is because we do not have enough oil production. All right. And so I'm going to read an article to get you guys to understand. This is something I was talking about. All right. Before Biden, before the whole green initiative, before the whole global warming push, everybody was pro-oil, okay, for the most part. And we spent from 2012 to 2019, we spent 1.18 trillion dollars into drilling and pumping oil and gas. So I'm going to read an article here to get you to understand why we're in the current situation and why I see oil prices going up even higher. Okay. So from 2010 to 2020, large publicly traded U.S. producers poured a total of 1.18 trillion into drilling and pumping oil and gas, mostly in fracking, but they made only 819 billion in cash from their oil operation, a combined loss of 361 billion. Okay, so here's something you need to understand: the shale boom was fueled by debt, by banks. Okay, we had to go after shale because there wasn't anything left. Conventional oil, the oil that we were pumping in the 20s, 30s, 50s, 90s, early 2000, we ran out of oil. So they went after shale. And we called it the shale revolution. And all of a sudden, we were producing more oil than Russia, more oil than Saudi Arabia. We were the kingpins of oil, and we told them to jump off a cliff, okay? But we spent $1 trillion of hedge funds, of banks, of money, and they had a total loss of 361 billion, okay? So that reduced the confidence of investing in U.S. oil, all right? Now, prominent analysts have warned for years that fracking industry is a machine to destroy capital. Yet banks have consistently ignored this message, as well as pleas from communities and environmentalists about the industry's terrible impacts. Why the banks chose to ignore these messages in a story of short-term greed, drowning out long-term rationality. As financial journalist Bethany McLean has pointed out, the now bankrupt Chesapeake Energy paid banks more than $1.1 billion in underwriting fees between 2000 and 2012. It was not a secret that Chesapeake was reliant on constant infusions of new debt to support its leases and new acreage and drilling. In its executives' lavish lifestyles, I have never seen a more shameful document than the Chesapeake annual statement to shareholders, one investor wrote to the company's board in 2009. If I could reduce it to one page, I would frame and hang it on my office wall as a near-perfect illustration of the complete collapse of a appropriate corporate governance, but to the banks supporting Chesapeake's unsustainable excesses, the fracking company was just another source of lucrative fees, so the infusions kept coming. Okay? So the banks were making so much money that they kept the flow of money flowing into the fracking world. And if you watch a video that I made 3 years ago, shale fracking is a flash in the pan. Okay? And here we are. All right. Now, our analysts for this report shows a significant change from 2017 onwards in the mix of the funding streams from banks for frackers. The appropriation of financing from loans soared in 2018 and 2019, while that from new debt and equity tumbled. The explanation for the pattern would seem to be that as financial journalists started to report at this time, investors were finally working up the basic flaws in the industry's debt-soaked business model and its inability to turn a profit. Okay? Today, our dilemma is that as a sector, we have destroyed a lot of the trust in the investment community over the last decade. Lee Tillman, chairman of CEO of Marathon Oil, said during a panel on a shale drilling at an industry conference in March 2019, yet the banks somehow ignored the signals from investors, including the seemingly obvious warning that their underwriting business with the frackers had dropped off, and they continued to shower the sector with loans. The result of this unrestrained lending was that by the third quarter of 2019, fully 91% of defaulted U.S. corporate debt was issued by oil and gas companies. The fracking companies analyzed this report have $120 billion in debt set to mature from 2021 to 2025. As shown below, a small number of big banks are largely responsible for creating this mountain of debt, much of which now seems unlikely to ever be repaid. 91% defaulted U.S. corporate debt was issued by oil and gas companies, okay? So these oil companies, Shale Fracking was a big loser, okay? And the reason why is because fracking is too expensive. It's the most expensive barrel of oil to produce, okay? And so we didn't have enough oil, so we had to go to fracking. Out of desperation, we went to fracking. If there was enough conventional oil to spend $1 trillion, then we would have a glut of oil. Oil would be $50 a barrel again, like the day Biden came into office, okay? So do I put the fault on Biden for high energy prices? No. I put the fault on a world that is addicted to oil, no different than I put the fault on a homeless person for being addicted to meth, okay? We're all addicted to energy. Without energy, the world does not go around. Without energy, we cannot build buildings. We cannot get to and fro from work to our homes. We can't refrigerate. We can't do anything without energy. In addition to energy, us using oil for energy, we're using it for plastic. We're using it for rubber. We're using it for many, many different needs, okay? And we're trying to come up with a solution, and that's what Joe Biden is doing. But because of him trying to preach to the world, hey guys, I have a solution. I mean, that's what he preached during the time of his, when he was fighting to become president. He kept telling the world, hey, I'm putting these oil companies in prison for what they've done to the world. And then he spent billions of dollars on painting the picture that the world is coming to an end unless I become president to replace fossil fuels with green tech, with green energy, okay? And so we spend $5 trillion to reduce energy demand, fossil fuel demand by 2%. And much of that is being undone by this war in Ukraine. Putin himself dropped bombs in Ukraine, and all of a sudden Europe is turning from green, turning from natural gas, and they're going to oil. Because it's either do that or let their citizens starve and die, okay? And so we're in a situation where we just don't have enough oil, okay? And so I'm going to read a few more articles here. Right now, WTI crude is 91.88, Brent crude 97.68. 6 ways the Inflation Reduction Act will help the energy industry. Now, here's the deal. I'm not going to go into detail about what they're saying here, but again, the message of the Inflation Reduction Act says to the world, fossil fuels lose, and green tech is paving the way. Get out of the way, fossil fuels. We're replacing oil, okay? Nobody's going to invest in a dying industry. That's what the world believes. And that's exactly what happened in the beginning of his administration, which is why we're in a 5-year underinvestment cycle, okay? Now, here's the deal. The Inflation Reduction Act is causing companies like British Petroleum, where's the article here? British Petroleum to sell Mexican oil assets as it ramps up renewable business. BP is selling its oil assets in Mexico as it seeks to focus even more on its renewable energy business. The political environment. So here's the deal. They are selling oil assets so they could focus on their renewable energy business. Now, this is a rinse and repeat of what happened in the shale revolution. They went after shale knowing that it's unsustainable. They lost, out of 1.18 trillion, they lost 360 billion going after shale. In addition to that, it is the fastest declining oil formation. Declines upwards of 60% a year. That means if we don't drill anymore today, our decline rate, we will lose several million barrel a day of output in the U.S. That would be a tremendous hit to global oil prices. I mean, because oil prices skyrocketed to almost $140 a barrel because we thought we were going to lose 3 million barrels a day from Russia. Well, we haven't. Imagine if we lost 3 million barrels a day from U.S. oil. That would happen if we stopped funding U.S. shale. They're not increasing oil output. All they're doing is maintaining it. And we're seeing a decline in U.S. output. Okay. Now, British Petroleum took money from banks to develop shale, not because they knew it was going to be profitable, because they were giving them money and their execs and their CFOs, they could live a lavish lifestyle while their stocks all went up. Okay, does a oil and gas broker, or does a typical broker or a typical investor understand that dynamic? No, but they just invest into it. Why? Because it's shale revolution. Look, everyone's drilling oil. Look, all this oil we're pumping. Okay, but if shale was like conventional, we'd be producing about 20 million barrels a day versus 11 something million, because their decline is so quick. So here's the deal: they took easy to get to debt money, and they spent trillions of dollars on U.S. shale, and as a big fat loser. Why wouldn't they take green money? Why wouldn't they? They're doing the same thing they did with shale. They know green is a big fat loser. They know they're chasing a carrot that they will never catch. You can't catch it. With the increase, I mean, oil demand has been increasing for the last 50 years, ever since the 70s. You're not going to reduce it. You can't. The growth rate, we can't keep up with it. And so all of these oil companies, sure, give me trillions of dollars. U.S. banks, sure. If the Inflation Reduction Act gives me billions and billions of dollars, I'm going to go green. All the while, these green plans are going to bring in billions of dollars, and it's going to make their oil wells even more valuable, because everybody knows that oil prices are going to go up because of this. Okay, I mean, it's a win-win for these oil companies to go green, even though that their oil engineers know the truth. They knew it about shale. I mean, I'm not smarter than these Chevron oil engineers, that they understand. They're standing right in front of that oil well as it pumps. They've got all the statistics. They have all the numbers. And I was one of the few people getting on YouTube. Well, there's a lot of people preaching about it. It just wasn't mainstream. But am I smarter than a Chevron engineer, petroleum engineer that has all the data in front of them? No, I'm not. I'm just simply stating the facts, the truth. The truth is that shale was a flash in the pan, and it's a bad investment, and the truth came out later. Now I'm telling you the truth about green energy. You can't replace oil demand with green tech. You just can't. Oil is the cheapest combustible energy that exists today. It makes the world go around. In addition, oil is not just energy. It is also plastics, rubbers, greases, many, many things that we need. A Tesla has grease in it. A Tesla uses oil. It takes a tremendous amount of oil to build a Tesla. It takes a tremendous amount of oil to charge Tesla batteries. And the limitations of lithium batteries, I mean, lithium batteries, the demand for lithium is increasing, and those prices are going to go up. Look, I see the writing on the wall, okay? This is only going to, this whole green initiative, this big win for the left, as Joe Biden rejoices, as Nancy Pelosi rejoices, Chuck Schumer and all those guys, as they're rejoicing, thinking they've done the greatest thing in the world, it's a big loser for American families. Because I'm telling you right now, they're spending your hard-earned money on a solution that will not work. And the numbers are being skewed. You imagine these massive wind turbines and these solar power panels energizing and powering the world. But it's too expensive. I mean, Germany doubled their price for energy. Doubled their price. The Germany's energy prices were twice as much as the U.S. because they all went green. And now they're jumping ship. They know the truth about green. But one little signature in the White House makes people billions and billions of dollars. Okay? And so who on the top is benefiting from this? Well, it's whoever is getting on the green train. But in the end, we're going to see oil prices go up substantially. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe. If you're interested in oil and gas, go into my description below, fill out the form. I'll talk to you about oil and gas investments and what we have to offer you. All right, guys, thanks.